If used correctly, double bottoms are chart patterns that can make you a very rich Forex trader. As a matter of fact, it has helped me stay highly consistently profitable in the market. It is one of the most reliable chart patterns in technical analysis. In this video, I am going to be showing you how to identify and trade the double bottoms professionally. If that sounds great, please give this video a thumbs up, and while at it, don't forget to smash the subscribe button and turn on that bell notification so you don't miss my next video.
Hey, you talk too much.
Let's get back to the topic. What is a double bottom? Double bottoms are bullish trend reversal formation. They form after an extended move downward. Now, what does a double bottom look like? Well, I have this chart to show you what a double bottom look like, how to identify a potential double bottom formation. But before I jump into that, I want to remind you that you don't trade double bottoms anywhere they appear on your chart, because if you do that, that is a recipe for disaster, right? So you want to look for double bottoms around key levels. I'm talking about levels that you expect price to most likely react to, right? I mean, as a Forex trader, you must have plotted your level and you're expecting that when price comes into that level, you are expecting some kind of a rejection, right? To take a trade. So once price approaches these levels, that is where you want to see a double bottom, not in the middle of nowhere. Now, what type of key levels do you look out for when trying to trade a double bottom strategy? Now, you are looking for support levels, or maybe a trend line level, or a Fibonacci retracement level, or whatever level it is you are using. If you're an indicator based trader and you are using the moving average, I mean, you want to see double bottom formation at these moving average areas. In a nutshell, you are just trying to look for trading opportunities using the double bottom strategy at key level areas you were originally expecting price to react to, right? Now, when price approaches these key levels, what you want to see price drop, bounce off, and come back for the second time and give you some kind of a rejection to take opportunity and buy into the market, right? So what I usually do is this. How I determine a valid double bottom formation is when price comes into that level, bounces off, I try to pick my rectangle tool and draw from the first bottom then to the wick and project it into the future, so that when price comes back in for the second time, when price comes back in for the second time, I don't want to see a candlestick come and close below. When the candlestick comes and close below this previous wick here, then it invalidates this double bottom, all right? So a candlestick cannot come and close below, but a wick can actually come below, all right? It's fine when a wick comes below, but a candle, the body of the candle must not come and close below. It makes this setup invalid, all right? So what happens when price comes for the second time? Even if it does break below it before going back up and closing above it, then I have a valid double bottom there, all right? And what I do next is I place my trade here and I pull my stop loss below here to take advantage of the next move to the upside. So whatever strategy it is you are trading, you should always apply a rule. You don't just trade randomly. You don't just hit the buy or sell button randomly. Always apply a set of rules. So this is my rule for trading the double bottoms. Now, how do you identify and trade a double bottom on a real chart? Now, let's take a look at USD CAD. This is a trade that I took and I made over $4,000 on this trade alone. Remember, when we're starting out, I said you want to look at double bottoms that forms around key levels, and these key levels are your support or your trend line levels, could also be your Fibonacci retracement level, right? Now, these are areas of value where you are originally expecting price to most likely react to. Now, I'm not going to talk about key levels in this video since we are focused on double bottom. So if you want to learn how to plot these key levels and other good stuff, then you may have to grab the course, all right? Now, if I take you to the Telegram channel, and if you notice on the 26th of April, as you can see here, I posted this chart where I was expecting price to come into this trend line and drop all the way down into this zone before going bullish. Now, if we go back to our chart, you will notice how price came into that trend line, dropped into that zone like I predicted, and gave me a double bottom formation. However, I jumped into this trade around here and I took profit around here. I would have held for a longer period of time, but because of the craziness that is happening in the market right now, if you look at dollar index, we are ranging seriously. So because of that, I thought it wise not to hold the trade for an extended period of time. I decided to close my trade around here. And as you can see, we've been stalling ever since. And that was how I was able to make over $4,000 on that trade alone. Now, if we come to this zone, just like I talked about how to identify double bottoms, price came in, bounced off before coming back in. I was supposed to catch this trade here, but I was busy with other things. So I came online when price was trading around here. So at that point, I took advantage of the trade and bought into that trade. And as you can see, it played out well. Now let's quickly go and see another example, which is on USD JPY. So as you can see on USD JPY, price was busy creating higher highs. This is a high, this is a higher high, this is another higher high. And as you can see, we created a lower high and a new lower high, right? So when price created this higher high, I was expecting price to come back into this zone, this particular zone, this support level and this trend line level, right? You can see how they confluenced, right? So at that zone, I was expecting price to come into that zone and give us a rejection so that we can trade all the way to the upside. And as you can see, if I zoom in properly, price came into that zone, bounced off, came back for the second time, and then gave us this rejection. And I took advantage of this trade from here to take this trade all the way to the upside. Now let's take another look at BTC. On BTC, if I zoom out properly, you can see price has been bullish all the way from this zone all the way to the upside, right? So when price was trading around here, which is here, as you can see, we came into this zone, we stalled for a bit before blasting all the way to the upside. Like you already know, price doesn't just move in a straight line. So once there is a break above or below any level of support or resistance, price will most likely come back for a retest before we continue that trend. All right. So that was why I knew when price broke above this zone, I was expecting a pullback. And at that point, I sent out this chart on the group. Let me just enlarge this. You can see price bounced off this zone before, bounced off this zone, went back up, created a new higher high, taking out this high here. And I was expecting price to come back into that key level, right? Let's go back to our chart. And when price came back into that key level, I went all the way down to the 1 hour time frame. And on the 1 hour time frame, this is the level I'm talking about here. If I zoom out, you are going to see clearly. So as you can see, this is the trend line. This was when price broke above, and this was this area I was expecting price to pull back into. So now let me zoom back in. And as you can see, price came back into that trend line. But for the first touch, it didn't come into that trend line. Price bounced off, then came back. And this week came into this support area and also this trend line area. And what did we see after that? We saw a massive rejection. So this was my cue to jump into the trade. And as you can see, price moved significantly to the upside before even this bearish move started happening. So of course, it's obvious money has been made before all of this downtrend started forming. Let's also take a look at USD CHF. If you look at USD CHF, I would like you to commit this price area into memory. This is 88601. So if I go back to the daily time frame, this is the daily time frame and this is 88601. If I zoom out properly, you will notice that price came into this zone and then bounced off. Now, why did price react to this zone? Let me make it more visible. When price came into that price area, price bounced off. And if I zoom out, you will see that price has previously used this zone as an area of value before. This price area is the reason why price blasted all the way to the upside. So of course, when price comes back to that area, we should naturally be expecting a reaction, right? And if we go back to the 1 hour time frame, you can see that price actually came back into that price area. And like I said earlier, you want to look for these double bottoms happen at areas of value, not just anywhere on your charts. You get the point. So when price came into that area, it gave us a double bottom. And after it created the first bottom here, what did I do? I selected my rectangle. Then I did what? I plotted my zone. I extended it to the wick below and then projected it into the future. And now what can you notice? When price came back into that zone for the second time, what happened? Price blasted all the way to the upside. And as you can see, money was made and all of that before price continued lower. Now, like we all know, there's no strategy out there that is 100% perfect. No matter the strategy you use in the Forex market, you are definitely going to have losing trades, all right? But the whole idea of trading is to win more of your trades than your losing trades, all right? You want to have more winners than losers. Now, I want to show you an example of a trade that I actually entered with this exact same strategy and I ended up losing that same trade. If you follow my weekly videos, you would notice I talked about price being in an uptrend, price creating higher highs and higher lows. I won't go into every nitty-gritties of that, but I just want to show you an example of a double bottom trade that I took. And as you can see, price created a new higher high here, right? And when price was coming back into this zone, I was actually expecting price to react within this zone, all right? So when price came down below and gave me a double bottom, I assumed that, okay, maybe this is a manipulation, and now that we have a double bottom, price is going to jump all the way to the upside, take out this trend line and keep blasting all the way to the upside. I was originally bullish biased on this, and as you can see, it ended up playing out. But I was trading the same strategy, and as you can see, I jumped on this trade and price shot up for a little bit, and then what happened? Price came back and stopped me out because my stop loss was right below this area here, and as you can see, this candlestick took me out. Now, before you add any new strategy to your trading arsenal, I always recommend that you backtest and backtest properly. By backtesting, I don't mean going back into historical price action and backtesting just 10 trades or just 20 trades. No, you want to backtest nothing less than 100 trades, all right? That is the only way you could tell if this new trading strategy that you've come up with, or this new trading strategy that I'm teaching you right now, is actually profitable, all right? But make sure you have your rules in place. You want to trade these double bottoms at areas of value, at areas of interest, at key areas, all right? You want to see this double bottom form at a trend line or at a support level or at a Fibonacci retracement level. Now, if you want to know how to use all these tools, if you want to know how to plot your key levels and all of that, then get the course. This has been discussed into tiny little details within the course. The link is in the description below. Now, if you want to take your trading career to the next level, our mentorship programs can help you achieve that. Just visit www.letstrade10x.com. The link is also in the description of this video down below. And if you are not interested, it is totally fine. So just make sure you like this video and subscribe to this channel. Thanks for staying to the end of this video, and I'll see you in the next one. Bye, guys.